With all this volatility, where are we going?
If tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation. If we define a bear market as stocks feel like a grinder, you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person. I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50.
The markets are a roller coaster right now. Wild swings, nerve-wracking drops, and no clear end in sight. Investors are stuck asking the same urgent question: where do we go from here? Volatility has become the new normal, fueled by trade wars, geopolitical tensions, and the nagging fear that this could be more than just a temporary slump. Some see a buying opportunity in the chaos, while others brace for deeper losses. The only certainty? The market hates uncertainty, and right now, there's plenty of it. Tom Lee, a seasoned market strategist, offers a measured take on the turbulence. He acknowledges that if trade tensions ease, a sharp rebound could still happen, but the odds aren't exactly reassuring. He frames the current downturn as a slow, grinding bear market rather than a full-blown crisis, one that's been chipping away at portfolios since late last year. For the average investor, it feels brutal, but Lee points out that true financial tightening, the kind that sparks a recession, hasn't yet taken hold. So is this the bottom, or just another dip before more pain? Lee suggests that while short-term traders are desperate for a clear signal, long-term investors should stay focused. U.S. companies have weathered storms before, and stocks are now deeply oversold. Historically, that's when opportunities emerge. The market's next move hinges on whether fear or fundamentals win out. One thing's for sure, in times like these, keeping a cool head is the ultimate edge. While Tom Lee paints a bullish long-term picture for Bitcoin's resilience and institutional adoption, Matt Hougan provides a more balanced perspective, pointing out both the risks and the asymmetric opportunities in today's volatile market. Their discussion highlights a key issue. Is the future of crypto truly independent of global economic turmoil, or does it still depend heavily on Federal Reserve decisions and geopolitical events? Let's now listen to what Matt Hougan has to say on this important discussion. As you watch this video, please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
I think crypto is all about short-term versus long-term right now. Long-term, everything is lining up for a sustained bull market in crypto. We see continued flow into Bitcoin. We see continued loss of faith in institutions. On the Ethereum and other asset side, we see rise in stablecoins, rise in tokenization. All of that's looking great. But of course, we can't look past the short term. So most of us spent our weekend tracking the latest, over and back on tariffs, wondering how much macro chaos there will be in the market right now. I really think investors need to decide, are they short-term investors or are they long-term investors? Those have very different feels in the market right now. And that's sort of the mix I'm trying to weigh myself as I look at these markets. You should be crossing your fingers. Good luck to the short-term investors. The challenge in this market right now is the macro forces are so large and they're so idiosyncratic and so unpredictable. We could have a tweet sometime in the next 10 minutes that sends the market plus 5% or down 5%. I think it's extraordinarily difficult to be a short-term investor in this sort of market activity. So I'd be monitoring the macro situation. I'd be monitoring every tweet coming out of Washington, and I'd be wondering what's going to happen next. Maybe keep an eye on the 10-year interest rate, on the dollar weakening. it's a very difficult environment, I think, for short-term investors.
Now, sticking with those short-term investors, I want to talk about U.S. President Donald Trump really flip-flopping on these tariffs. Talk to me about what that signals for you.
Yeah, I think in the short term, it's signaling just that this is a very volatile market. I think as you extend out a little bit, it can't be positive for the global economy in the medium term. That's what you're hearing from everyone out there. And you're in this difficult situation where we're clearly breaking something in the existing economy. We're clearly slowing down global trade. We're clearly weakening the dollar. We're clearly introducing uncertainty. That is a negative setback. And there's this waiting game to see when the Fed or the Treasury will step in to inject liquidity into the market, will give us a new sort of recovery program. The challenge about us, where we're sitting from a short-term perspective, is all the signaling coming out of the Fed and out of the Treasury is we're not going to do anything. The market is functioning. It may be challenged, but it's functioning. So whether it's former Fed governors writing pieces for Bloomberg, even Janet Yellen adding her thoughts on the market earlier today, they're all saying this is not the responsibility of the Fed and the Treasury. So I think investors are sort of playing this waiting game. When will people come to the rescue? And the people who usually come to the rescue say, not yet. And that, I think, gives us a negative bias in the short term. So if I were guessing, I think there's more risk than opportunity until we see the Fed or the Treasury ride to the rescue. And there's just no sign that they're planning to do that right now.
What's the likelihood you think that they do come to the rescue eventually?
Well, eventually the likelihood is 100%. Eventually they can't resist the big red button. They've been taught over time that when there is market uncertainty or economic uncertainty, you have to come to the rescue with liquidity. I think if we see more challenges in the Treasury market or a disorderly sell-off in the dollar, I think you'll see them step in. So it's going to happen eventually. But I do read from the signaling that it will be slower than many people expect. So this uncertainty could certainly stretch for days. Maybe it could stretch for weeks. Possibly it could stretch for months. I think we're in for a relatively significant period of volatility in the markets before those forces ride to the rescue. But make no mistake, eventually this is a political game and eventually they will ride to the rescue. It's just a matter of when. It will happen, but I think it could take a little bit longer than people have been conditioned to expect in the past. So I'm extraordinarily bullish for the end of the year. I think we're going to see a relatively significant decoupling between Bitcoin and equities. I think you're going to see Bitcoin move to new all-time highs, and Bitwise's prediction from December of last year that we'll get to 200,000 on Bitcoin, I think still is plainly in sight. What do we need to have that happen? We need the macroeconomy to settle down a little bit. We need maybe one of these rescue packages to start to come into the market. I think if we see either of those things, this market is primed to rip. If you look at how Bitcoin in particular has been performing over this market pullback, it's done significantly better than in previous stock market corrections. Usually when there's a stock market correction, at least for the last 10 years, if the stock market is down 10, Bitcoin is down 30. Instead, this time, Bitcoin is more or less keeping pace with the equity market. To me, that's an incredible sign of resilience and strength. 2 years ago, if I told you that the global economy was falling apart and Bitcoin would be at $84,000, you would have laughed at me. And yet that's what we're seeing. So as soon as we see some signal that the economy is going to stabilize, that macro will get out of the headlines, I think we'll quickly be to new all-time highs. And if we do see any sort of stimulus or the Fed or the Treasury stepping in, I think it's off to the races and on towards Bitwise's $200,000 target.
The crypto market is caught in a tug-of-war between two very different realities. Long-term, the setup is undeniably bullish, Bitcoin inflows are steady, institutional distrust is fueling demand for decentralized assets, and the rise of stablecoins and tokenization signals a maturing ecosystem. But short-term? It's a minefield of macro chaos, where a single tweet or tariff headline can swing markets 5% in minutes. Investors are forced to pick a side. Are they playing the volatility or building for the next bull run? For traders glued to their screens, this market is brutal. Geopolitical uncertainty, Fed hesitation, and erratic policy shifts, looking at you, Trump tariffs, make every move a gamble. The Fed and Treasury insist they won't ride to the rescue yet. But history says they'll crack eventually. When? No one knows. Until then, short-term investors are stuck parsing every Washington whisper and bond yield flicker. Meanwhile, long-term holders see a different picture. Bitcoin's resilience during this equity slump hints at a decoupling, one that could send it soaring to $200,000 plus once macro storms pass. The bull case hinges on two triggers: macro stability and Fed intervention. When, not if, either arrives, crypto could explode. Bitcoin's relative strength, down just 10% alongside stocks instead of its usual 30% nosedive, suggests institutional faith is growing. And if the Fed flips the liquidity switch? It's off to the races, as one analyst puts it. Bottom line, survive the short-term noise, and the long-term payoff could be historic. The only question, can you stomach the wait? Let's watch more clips from the interview.
It's pretty unbelievable. I entered into Google to figure out what happened in 2018, and it said that the market pulled back due to Trump's tariff wars, weakening dollar, exactly the same things that we're living right now. And I think that's important for people to remember. We have been through these sort of market crises. We have seen what happens in the crypto market. Look, crypto is in a generational, multi-decade bull market. We can have these short-term challenges that set us back, but long-term, the forces powering this industry forward are going to overcome and overwhelm that. So it was fun to flash back a handful of years to the previous Trump presidency and see that, we have experienced this before, and there is light at the end of the tunnel eventually. Gold is a proxy for current demand for hard money assets, for store of value assets. When I look at Bitcoin's addressable market, I assume it's going to match gold in about 5 to 10 years. So as gold's addressable market goes up, the long-term price target for Bitcoin goes up as well. The reason Bitcoin is down is because it's both a hedge asset and an emerging risky asset. So what we've seen historically in the short term, when there's market volatility, you see Bitcoin pull back with all other risky assets. But in the long term, it catches up and then some. So every time gold sets a new all-time high, I cheer. It means that Bitcoin's ultimate all-time high is ticking up. It used to be 800,000. Now to match gold, maybe it's 1.1 million. I saw today there's a prediction gold could go to 4,500 out of, I forget, it was Goldman Sachs or JP Morgan. If that's the case, you're talking about 1.5 million Bitcoin. So gold sort of forecasts the direction Bitcoin is going long-term. Again, we just need this market risk to stabilize a little bit, and you're going to see Bitcoin catch up and then some.
When could we get to Bitcoin over $1 million?
Yeah, I think 5 to 10 years is about right. I think 1 or 2 more cycles. Look, a few things are true. The vast majority of people who need to own Bitcoin don't yet own it at all. We need $1 trillion of buying into the Bitcoin market for institutions to just level up to a neutral portfolio. I think there's no way that happens without pushing Bitcoin's price up significantly. I'd also say, having watched various technologies over the past 20 or 30 years, everyone's always skeptical of the digital version of analog goods. But find me another industry where the digital version didn't just catch up, but eventually surpassed the physical good. It's happened in media, it's happened in advertising, it's happened in movies, it's happened in streaming. It's going to happen in store of value assets. So how long could it take? I think 5 or 10 years, right? Remember, 10 years ago, where was Bitcoin right now? It was 2014. It was trading for a few $100s. Today, we're talking about $100,000. It's not that hard to imagine that in 10 years, it's easily at $1 million or more. I think it'll happen by 2029, but it could be anywhere around then. But all the trends are pointing in that direction from where I sit. There are 2 places I think are extraordinarily attractive right now. I think this remains the best risk-adjusted time to purchase Bitcoin in its history. We've removed a huge amount of risk. We've removed custody risk, trading risk, regulatory risk, government risk, and yet we still have 10x upside at a minimum. To me, that makes it an extraordinarily positive expected return from a risk-adjusted basis. I think any investor who doesn't have Bitcoin in their portfolio should take this pullback to establish that first position, at least get to 1 or 2% Bitcoin, maybe 10 more if you're more bullish. The other place that I find extraordinarily attractive right now is all the way on the other end of the spectrum at the DeFi protocol layer. I continue to think we're setting up for another DeFi summer at some point. You look at various statistics, they're already at all-time highs. Those are proven programs. And if we get regulatory relief, I think there's a lot of value in some of those DeFi specific protocols. So a barbell strategy that's Bitcoin and then a handful of DeFi protocols, I think would be extraordinarily well positioned for the rest of the year.
A quick Google search reveals an eerie parallel. Trump-era tariff wars, a weakening dollar, and a market pullback. Sound familiar? We've been here before. In 2018, crypto weathered similar macro storms, proving short-term pain doesn't derail long-term trajectories. Fast forward to today, and the script feels identical. Panic over trade wars, Fed uncertainty, and gold soaring while Bitcoin stumbles. But here's the key difference. Crypto's infrastructure is stronger, adoption is broader, and the case for digital assets as a hedge is louder than ever. Gold's 20% surge this year isn't just a safe haven play, it's a roadmap for Bitcoin's potential. Analysts see gold hitting $4,500. If so, Bitcoin's long-term price target could recalibrate to $1.5 million as it eats into gold's $12 trillion market cap. Short-term, Bitcoin's dual identity, both risk asset and hedge, means it takes punches with stocks before outpacing them. But every gold breakout whispers the same truth. Bitcoin's ceiling is rising. When macro dust settles, the catch-up rally could be historic. For long-term believers, this dip is a gift. Bitcoin's risk-reward ratio is arguably the best in its history. Regulatory clarity, institutional custody, and 10x upside make it a core portfolio hold. On the opposite end, DeFi protocols are quietly priming for another DeFi summer, especially if regulatory winds shift. The strategy? A barbell approach, heavy on Bitcoin, selective on DeFi blue chips. Because while tariffs and tweets may dominate today's headlines, the next decade belongs to crypto's unstoppable trends. The only question, will you be positioned when the tide turns? As we wrap up, gold's rally suggests Bitcoin could hit 1.5 million. Too optimistic or inevitable? Where do you see BTC in 5 years? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.